morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set to witness some amount of consolidation after the record rally witnessed in the previous session. Bank Nifty would be in focus. We'll talk about global cues. Gift Nifty trades around that 20,800 level, indicating a mildly positive start coming in for Dalal Street. While US markets are pulled back on Monday after a blistering rally in November. Talk about Asian stocks. They've slipped to 3-week low. Focus now turns to US jobs data. Talk about FII and DII data. Foreign institutional investors have bought in shares worth around 2,073 crore in equities, and DIIs too have pumped in as much as 4,797 crore worth of stocks on December 4th. Well, if you talk about the FII cues in the F&O space, FIIs have turned in the net buyers in the Bank Nifty futures, alongside also the Bank Nifty index futures and options put together. Across the board, they've been the buyers there. So that's a pretty positive setup, at least there. But F&O ban, well, what is new in the ban is Indiabulls Housing Finance, India Cement, C Limited. What still remains in ban is Delta Corp. And if you talk about option cues or the Nifty PCR, that is put call ratio, a mood indicator per se, that has come in at 1.39 versus 1.30. A ratio which is above 1 indicates that there have been more puts as compared to that of calls. So that's also the ratio which is above 1 for past couple of days, even when Nifty has been scaling in those record high levels. Whether today is going to be any different, whether it's going to be a battle of bulls to stay put where they've been, or it's going to be some amount of breather, that needs to be watched out for. But Bank Nifty, essentially, that's going to be the one which is going to be an interesting one after the record rally that has scaled in the previous session. Do bear in mind the fact that for a very long time, it was an underperformer. Now, Bank Nifty finally has started witnessing some amount of traction. But PSU banks per se have been an outperformer through and through. Talk about Nifty and Bank Nifty put together. It's been outperforming both of these indices put together in previous session too. It was up by as much as 3.5% in trade today. Of course, some cooling off happened post that, but most of the PSU banks did extremely well in trade. But let's get going with the stocks that need to be on your watch list for the day. Of course, we're going to be talking about all those stocks in just a bit. But before this, let's get the trade set up, the strategies and the recommendation coming in from Prashant Sawant from Catalyst Wealth, who's joining us early this morning. Prashant, good morning.
Good morning, Nickey, and good morning to all the viewers.
All right, what a record rally in the previous session, right? Talk about Nifty, talk about Bank Nifty. What do you think are the next big numbers that one can look at, A? And also for the day, what kind of levels can one look at? What kind of strategy can one adopt?
So I think, Nickey, if you look at the pre-open, I think it clearly looks like a strong opening once again. And I would be trailing very closely, especially on my Nifty positions. So currently, if you see, the pre-open shows somewhere around approximately 20,800, and my trailing stop loss now has to be 20,700. For positional traders, we can keep it at 20,650, but not lesser. So in case of any reversal, your profit should be booked at a very handsome level. But when it comes to Bank Nifty, I think there is a lot of steam left. So here I would be a net buyer even now, and my stop loss would be around 46,500. I'm looking at targets around 47,300, 47,500 on Bank Nifty. It has been an underperformer, and the past 4 days have been a very strong rally in Bank Nifty, including the individual components, especially HDFC Bank, which was a lackluster mover for the past almost half a year. I think that is breaking out nicely. So my watch list would be more on the Bank Nifty and its individual components as compared to Nifty.
Prashant, 47,300 and 47,500, you said these levels are reachable or scalable by Bank Nifty by when?
So I'm looking at those levels in the month of December itself, because Bank Nifty had just crossed its previous high. Typically, when an index crosses its previous high and manages to close above it, I think you can easily expect a 2 to 3% rally above that. So I'm expecting that kind of a rally in the month of December itself.
Prashant, the follow-up to that, PSU banks have done exceptionally well thus far. They've perhaps been the outperformer. Do you think here on, at least from the technical chart levels, Bank Nifty looks more attractive as compared to maybe PSU banks? Where do you think where there will be more risk reward, at least when it comes from the technical charts point?
So I think one stock that definitely stands out in the entire PSU banking basket is Canara Bank, currently quoting 426, 427. I think any dip on this stock, I would be a little apprehensive at this level. But if I get a dip around 420 odd levels, I would be a confirmed strong buyer in this stock. I'm looking at a move to somewhere around 445, 450 in this stock. It has been a strong volume back breakout, and in fact, the good part is the volume has been increasing for the past 5 days, which shows a sign of strong hands holding on to the stock.
Sure. Apart from that, you've also spoken about, or maybe just recommended RCF and LIC as your top two recommendation. Talk about that and the immediate support and resistance levels for these two as well.
So overall, I look at strength coming out in the fertilizer sector, and RCF looks good with a stop loss at 125 spot closing basis. I'm looking at targets around 155, 160, and if the stock sustains there, we may even see a move to 180 odd levels. My next pick would be LIC, Housing Finance, and there my stop loss is 490, and I'm looking at targets around 540. The stock has shown a lot of strength backed by volumes, so I'm looking at another 5 to 6% move on this.
You know, the conversation is going to be incomplete if I don't talk about Adani Group of companies which have done exceptionally well in previous session, right? And also a couple of reports now suggesting that there's going to be a complete clean sheet that's going to come through the week on the couple of pending cases. That's also working in the favor of Adani. Of course, a couple more reasons working in the favor for Adani. But from a very aerial perspective, from the whole group, what do you like? And what are the levels that one could look at if they want to enter into that stock?
So, Nickey, in this entire space, one stock which was not so badly affected by all the news around it was Adani Ports, and I would always go on recommending the same one. Although Adani Enterprise looks strong, but it's extremely volatile from an investor perspective. So, Adani Ports looks good, currently quoting around 870, 880 odd levels. I think you can buy here, and any and every dip on this stock can be bought. This can move swiftly to levels around 910, 920.
Sure, Prashant, volatility is where you can make the money, right? The punter's bet, as may call it. But at least Adani Group of companies, Adani Power has done typically really well, at least when it comes to the YTD basis. The only stock which has done exceptionally well. So your preference is more now towards Adani Ports as compared to Adani Power, even as the theme continues to be power, right?
Yeah, my focus in the Adani pack would be more on Adani Ports. I see a good move coming in here and a swift move. So that's why I'm betting more on Adani Ports as compared to Adani Power.
All right. Any other multi-bagger idea you think you have ahead of, it's a very broad question. And of course, we're going to be coming back to you on that one. And you can probably let us know multi-bagger idea similar in the like of next big Adani for us. But let's actually look at the performance first. Mark the open. Well, what a start, man. It's 20,700 mark. Those numbers, three numbers on the screen, gains to an extent of 0.2% thereabouts. It is a good start to the markets. Well, honestly, we were expecting some amount of consolidation to take place. But that's here, the market again, perhaps, just extending that exuberance, as you may put it. 20,700 mark with gains of nearly 0.25% thereabouts. Talk about Bank Nifty, that's where the traction is also, apart from the PSU banks, PSU banks have also been an outperformer, but Bank Nifty thoroughly surprised the markets yesterday. PSU banks doing well in trade too, 0.3% thereabouts, but Bank Nifty index, let's pull that up just to see the amount of traction that this index is now sitting at. And we're looking at gains, pretty gains to an extent of 0.5%. 46,700 mark has been scaled in early deals for Bank Nifty. Talk about the mid cap and the small cap index, just to reiterate a sense of outperformance coming in from these broader index. Well, it's a flat start coming in for the mid cap. So clearly, this rally is led by the blue chips, as you can, it's apparent out there. But small caps, let's also talk about that. 0.3% of gains coming in for the small cap index. It's clearly a day where, it's Nifty 50, which is clearly leading. But let's also talk about the other sectoral indices, something in the like of Nifty IT. A bit of losses coming in for that one. Apart from that, FMCG, metal index and pharma index, just to see where the trend and traction is lying. Well, FMCG is doing well, 0.3% thereabouts. And pharma index, let's look at the trend for that one. While metal index is also holding up in green, 0.2%, 0.25% of gains coming in for the metal index. And pharma basket right now in fine fettle with gains of nearly 0.25%. Let's pull up also the top gainers and the top losers that we have on the screen just to see the momentum. BPCL, ICICI Bank, Axis Bank, it's the rally read by financials clearly. HDFC Bank, Adani Enterprises and Adani Ports. Adani group of companies along with financials. They're lifting the markets higher. Talk about the top losers, if any, just to see where we can look at the areas of weakness. Well, a couple of names there. IT at the top, HCL Technologies, Infosys, Bajaj Auto. These are some of the top losers that we have. Bajaj Finserv, NTPC and Ultratech Cement. Well, these are some of the top losers that we have. But we're going to quickly go back to Prashant and check with him. Prashant, what do you make out of this open? 20,700 mark clearly. That record high level for the market. It is at a record high. It's opened it at a fresh record high. What do you think? What is the next big number for the markets? How can one now trade at after this kind of start?
So I think, Nickey, as you said, a couple of questions. One was on the multi-bagger idea about the indices. So about the indices, I think and the rally now to 20,800, we need to be a little rational and look at booking out or at least trailing closely so that in case of any reversal, your profits are booked very near to the top. And as I said, I'm still a little bit bullish on Bank Nifty and I see a lot more steam left in it. So I would be trailing a little not so closely for Bank Nifty. As far as ideas are concerned, I think one stock which definitely looks good is Vascon Engineering, and it is quoting somewhere around 75, 76. I think it is more of a positional buy, accumulation kind of a trade, and one can keep adding up to 70 levels with a stop loss at 60 spot closing basis. I'm looking at a move eventually to around 9500 and maybe even higher levels on this stock. So accumulation is currently being going on after a very strong move. So one can participate in this stock. The risk is very low, and as compared to the risk, the reward is definitely very high.
All right. So Vascon Engineering is the one that Prashant has picked up. But Prashant, what do you think could be the next Adani for the market?
Well, it's a very tricky and difficult question to answer. But if I were to pick out the sector, I think one sector which has underperformed for the past 5-6 months or maybe even a year has been the metal sector. So I'm looking at a strong move coming out in the metal sector in the next month and a half. And my pick in this entire space would be JSW Steel, currently quoting 817. So any dip on this stock can be bought. I think it looks like a strong volume back breakout, and this stock can show levels around 850 odd levels in a near time.
All right, stay on the sidelines with us. We're going to be addressing in stocks and news in just a bit. It is a good start for the markets. The markets have opened it at a fresh record high after scaling in newer peaks in the previous session on strong macroeconomic data, elevated bets of US rate cuts in March, and ruling BJP win in key state elections. But let's address the stocks and news that we have. HCL Technologies, which is also one of the top losers on the index first, where the subsidiary is going to be selling in 49% equity for $170 million. Now the subsidiary will be selling the stake in the joint venture State International Holdings, and the transaction is expected to be completed by this second quarter itself. It has already completed in the second quarter of 2024. Well, that's the mark that they've looked at. Banari Aman Spinning Mills, that's another one that you need to watch out for, where the company, Banari Aman Spinning Mills, is the company that is going to be raising in funds up to 200 crore via right issue or QIP. The company has gotten an approval for sale of equity in subsidiary and JV company Young Brand Apparel, and the nod is also for sale of its garment unit. Along with that, 6.43 acres of land will be sold in. So these are a couple of developments coming in for the company. Right now, the stock isn't really moving too much, just thereabouts, 0.1% of thereabout gains coming in for this one. Another interesting one that we have, Honasa Consumer, Mamaearth, the parent of that company, Fireside is likely going to be selling in 230 crore worth of shares in a bulk deal today. Needs to be seen if that transaction has already been executed. But right now, the stock seems to be in good shape with gains of around 5 odd percent, 1.9% stake sale via block deal, offer price indicating of a discount of nearly 4 odd percent. That's coming in at least CAMS. That's another one. Computer Age Management Services, where the promoter has exited. It's holding the stake to an extent of 2,700 crore, worth around 2,700 crore. And on the buying side, you have funds named like UTI Midcap Sundaram, along with that Morgan Stanley, Goldman Sachs. These are some of the big mutual funds which have actually gotten to this one. Right now, the stock seems to be doing well on account of the names that have entered into the company. It is good blue chip funds that have entered into the blue chip stock. But I am also going to be going back to Prashant and check with him what does he make out of Honasa Consumer. Well, a bulk deal which is likely to take place or perhaps executed. What does he make out of that? And how can now one look at trading in Honasa Consumer?
So I think, Nickey, it has come to a good level for sure as compared to the listing, currently quoting around 403. So one can add position here, and any dip around 390, 395 levels would be a good buy. A stop loss for this stock has to be strictly 380. And as long as it does not break the 380 odd levels in spot, one can definitely hold on. I'm looking at pullbacks to levels around 435, 440 eventually on the stock. So looks like a good 10% move up from here.
Right. Prashant, any other sectoral bet that you think looks interesting? Let's talk about Bank Nifty. That's where the traction is coming in from. Canara Bank was the one bet that you chose from the PSU Bank basket. But how about Bank Nifty?
So if you talk about Bank Nifty, I think not exactly Bank Nifty, but slightly in the PSU basket. One stock which looks good and is breaking out is Bank of Baroda. After a long time, the stock is quoting about 210, which was a major resistance for the stock. So I look at moves coming to around 220, 225 odd levels. So one can enter this with stop losses around 205 and hold for targets around 220 first and 225 as the next target.
All right. How about something like an Axis and ICICI Bank also? These are some of the top gainers that we have on the list today. Any strategy to look at these particular stocks?
If I talk about Axis, I think it is a little bit stretched now. I would wait for a dip. Very strong. So any dip on this stock can be bought. Currently quoting 1145. I think a dip to somewhere around 1130, 1125 levels would be a great buy for this stock. And one can hold with stop losses around 1110, 1115. Eventually the stock may quote somewhere around 1175, 1180. So looks strong, but I would wait for a dip on.
All right. Looks like, any more stock ideas that we think right now could be doing well? FMCG basket is essentially the other one where, a lot of brokerages came out with reports suggesting that this is where the welfare schemes are likely going to take place. And we could see that, a rural demand perhaps doing well for the FMCG companies. So something like an ITC, something like a Britannia. Any particular pick within that space?
So I think definitely I would like to go with HUL. It has not performed for a long time and there was a strong accumulation. There's a breakout now and it is quoting around 2600. So I think this stock can be bought. The stop losses have to be in the range of 2550, 2560 positionally. And one can look at levels around 2700 comfortably because it may be a slow mover, but I think eventually it might reach to those targets very easily.
All right, we're just going to be bringing in Gautam Duggad in just a bit from Motilal Oswal. Of course, he's written in a brilliant report where he's spoken about the Indian politics and its correlation with equity markets, where he spoke about the BJP strong show to reinforce the market momentum. Also has scaled out an analysis, let's just say a trend analysis of how typically market has behaved a month, 6 months prior to general election. How is the momentum after the win? So that's an interesting one. He's spoken about, Motilal Oswal essentially has spoken about the expectation of political continuity in 2024, which is expected to bolster in the sentiment. And of course, has pegged in few names per se, which are the preferred sector ideas along with that stocks ideas. Typically, Motilal Oswal likes BFSI, industrials, real estate, auto and consumer discretionary. And within the large cap space, Axis Bank, SBI, M&M, Hero Honda, L&T, Ultratech Cement, Titan and Indian hotels. These are some of the other large cap ideas that Motilal Oswal has put out in its note release after the win, particularly state election wins yesterday. And in mid cap space, Motilal likes Godrej Properties, Indian Hotels, Lemon Tree, Suntech Realty, PNB Housing, Angel One, Global Health. Prashant, coming back to you, what do you make out of something like Indian Hotels and of course, Lemon Tree also per se? You think these two counters are interesting and we can see more momentum building in for these ones because they seem like a good idea, at least from the large cap and the mid cap. Motilal has given that as a preferred idea within the large cap and the mid cap space, and also not taking away Angel One because of the significant rally that the stock has clocked in thus far.
So, Nickey, if I talk about Indian hotels first, personally, it has been one of my favorite stocks. Moves very swiftly and it's not too volatile as well. So, I think one could definitely look at entering around these levels as well. Your stop losses have to be around the previous resistance level, which is around 420, 425 zone. Keep it in between that. And if the stock sustains this breakout, I think one can easily see it trading in the range of 460, 465. As far as Angel One is concerned, I think it was a phenomenal rally, and currently it is giving a nice dip, putting around 29.55. But the stock has moved from around 1900, 2000 odd levels to 3000 in less than 2 months, which is a 50% move. Currently, I think one can look for entering. It is just, if I were to talk on technicals, it is just showing a dip to the 20 moving average after a long time, which can be a very good buy. So your stop loss has to be placed at 2900 on spot closing basis. One can enter for levels around 3000 to 3050 on this stock. Overall, looks like a great buy at this level.
Right, Prashant, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us.
Thank you.
Well, it is an important day. Market has opened in at a record high, and to address the same, we have as an important voice from the market. Of course, we're now being joined by Gautam Duggad from Motilal Oswal Financial Services, who's also the head of research out there. Morning there, Gautam. Let's start off, kickstart a day when you actually join in on an occasion when markets have opened it at a record high level. So it's clearly a good start to the day, just in in line with what we were hoping or anticipating. With that in perspective, you've written a brilliant note yesterday where you've done some technical, or let's just say an analysis or data analysis, where you've put in perspective how market has typically behaved a month and 6 months before general election. Could you put that in perspective for us, and what can we expect going forward in the election 2024?
Good morning. Thanks for having me. Yes, we've put out that note where we've highlighted that for the last 25 years, 5 Lok Sabha elections, stock markets have given you good double-digit returns 6 months to the announcement of the election results, which is basically the period beginning November till May, because election results typically get announced in mid-May. So lowest return you got was 9% in that 6 months period, and the highest you got was 30-35% twice. Obviously, every period had its contextual nuance, and there were a lot of other factors also going on along with the elections. Like, for example, in 2009, you also had a recovery in the market from the global financial crisis. What the results of Sunday have done is basically removed an element of uncertainty which this market was battling with, because markets were justifiably anxious about the outcome of the state poll results. So to that extent, the better than expected performance of the current dispensation in 3 out of the 4 states removes that uncertainty and bolsters markets' confidence in the political continuity post 2024 elections. It won't be far-fetched to say that a lot of stars are aligning for India, or whether at macro level or micro level. At macro, we are the fastest growing economy for a decent size economy, growing at about 7.7 in first half, and possibly may cross 6.5, 6.8 for the full year of FY24. Rates have peaked out globally, and I think even in domestic economy, the rates would have peaked out. The crude prices are behaving, they are in a range. Bond yields have stabilized both domestically and globally. And to top it up, at the micro level, you have seen a very strong earnings growth. The earnings season, which ended around 2 weeks back, we'd seen about 28% earnings growth for Nifty versus expectation of 21%. So for the first half, corporate earnings are up 30%. And full year over estimates, which were revised marginally upwards, now stands at 22% growth. All of that put together basically means valuations are very attractive for large caps at about 18 times, right? And post September also, you've seen decent high frequency data points, whether it is GST collection, auto monthly numbers, power demand, freight demand, whole host of data points, PMI data on manufacturing and services. So the economy is in a decent momentum. Corporate earnings are doing well. And the flows in the markets have also been rock steady when you look at the domestic flows, right? So this removal of anxiety around the political outcome to that extent brings more cheer for the markets. And I think that this can continue into a pre-election rally for in the foreseeable future.
So when you talk about pre-election rally, I'm sure we'd want to understand what kind of growth can now one look at in the run-up to election. Of course, many of the analysts across the street have also not ruled out a Santa Claus rally by the end of the year. That's one. But if someone was just supposed to look, there's a fear of FOMO for some retail investors or some category of investors at this level when the market is at record high. Do you think it's a good time to now enter and there is still more run-up, like you suggested, there is still more rally left to this? What kind of percent of uptick can one look at in the run-up to the election? That's point number one. What are the risk factors that you think can spoil this rally? Third, you've also spoken about valuations being attractive at this level, right?
Yeah, so I would hazard a guess on the percentage upside because that's always fraught with a lot of risk. So I won't go down that path. All I can say is for people who haven't yet entered the markets and want to enter now, they have to obviously enter with a long-term horizon. You cannot enter for a 1 month, 3 month kind of play. Even if you want to do that, maybe I'm not the right person to advise on that. So if you have a 3-year, 5-year horizon and you have a capital which you can dispense with for that period of time, then obviously this period also looks good enough. Because if we compound at 14-15% earnings for next 3 years, right now we are talking about 18% for next 2 years CAGR. Even if you were to stretch that to say 15% for 3 years, given the fact that we are trading at 18 times, which is at a 10% discount to long period average 20 times, the possibility of an investor entering now, earning somewhere around 14 to 15% in line with the underlying corporate earnings growth is very strong. Because Nikita, what happens is, if you look at the last 12, 13 years history of India, a lot of events have come and gone, macro, micro, global Fed, crude oil prices, trade wars, and a lot of other wars. One thing that market is always respected is the underlying corporate earnings. 2010 to 20, when corporate earnings grew at a 6.5% compounding, Nifty gave you 8.5% compounding, right? From 2020 to 2023, corporate earnings compounded at 23%. Nifty gave you 27% compounding. And this year, we are talking about FY24 so far, 20% growth. So let's see where it ends. But it is safe to say that markets will broadly respect the corporate earnings in the long term. In the short to medium term, a lot of events will drive it. Sentiments, flows, liquidity, they will drive the market in the short to medium term. But eventually, the market will converge with corporate earnings. That's what history teaches us. As for the risk, the biggest risk is always in the unknown, right? Because if something is known as a risk, then market tends to discount it very fast. We've seen the corrections in the last 10 years, the large durable corrections, they're very few in the last 10 years, but whenever they've happened led by factors which were unknown and unpredictable. You look at 2018, ILFS came out of the bolt, right? Out of the blue. You didn't know. COVID 2020, obviously once in a century kind of an event, couldn't forecast. 2013, there was a decent correction that we had seen. It happened because of the taper tantrum. So the biggest risk is in the unknown factors, so that you can navigate by getting into fundamentally strong stocks with good balance sheets and cash flows, and you do not overpay too much for that growth.
Well, point well explained there. Gautam, I'm also going to check with you. You've in your note, you've put up a range particularly from November to May, this is what Nifty has done, is essentially rallied between 9 to 36%. Now, out of curiosity, people might just want to know if that's the kind of range you think could be replicated or outperformed, given that there is a thumping majority, not just on exit poll, state election results. Now the question is BJP versus who? I mean, how are you looking at it in terms of the percent gains that the market can now look at?
See, the way to look at it is that data is obviously history. So, it may repeat, may not repeat. If you try to build a fundamental construct, because that is what we as an equity analyst can do, politics will do what it has to do. And to whatever little extent I understand politics, the uncertainty to an extent has ended. But we must not run ahead of ourselves, because a lot of times things change. But if you were to assume this dispensation to continue, you would forecast two things. One, let's look at the numbers. If the Nifty EPS that we are talking about, 1140 rupees for FY25, if there is no material change there, maybe give or take a percent here or there, if you're talking about 1140, and markets were to just trade at its long period average, which is 20 times. This long period average is, by the way, 10-year average. Right now, we are trading at 21 times FY24. If you look at 1,000 rupees in EPS for FY24, let's say 20 times FY25, 6 months down the line, you reach a mathematical target of 22,800. And then you can add or subtract in that target depending on how the political outcome is, how the flows are, how the sentiment and liquidity is at that point of time. But if pure fundamental construct were to be built, then 22,800 is the mathematical target that I can work with if there is no change in our EPS estimate. And as I've been mentioning, I've used the if word many times, and that's what market is. You cannot be too certain about anything. You have to always work with probabilities, and then you have to be flexible enough to adjust your numbers as you move along. Because sometimes earnings can disappoint, sometimes earnings can surprise. First half earnings have surprised, and we've seen a 2% upgrade. What if the earnings disappoint in second half, right? So a lot of things exist. There are a lot of pros and cons associated with it. Possibly you might get into a reteasing cycle also at some point of time in CY24. That may at the margin help equity valuation multiples. So those are the range, those are the probabilities that I am currently working with.
Well, variables and the disclosures are well taken in place now here. But let's talk about your mid-cap ideas. You've laid out a couple of them in your report. Growth Edge Properties, Indian Hotels, you've spoken about Angel One, Global Health, Lemon Tree, PNB Housing. These are some of the mid-cap ideas essentially that you've captured. Which amidst these that you've already listed in your report is that one idea where you are most bullish in, and why?
So that has to go in large cap. I would prefer Titan, because that's something which is a proven performer, and it's a stock where we've been bullish for more than 10 years now. We see the compounding story unfolding very well, and that's our top number one preferred consumer discretionary idea in India for more than a decade, and we continue with it. So far as mid-cap is concerned, I think pointing out one idea will be very difficult because mid-caps are always bottoms up, and it makes sense to have a basket of a couple of ideas, which is why we've spoken about, say, hotels, real estate, industrials. We put out a very big, large thematic report on capital goods / industrials yesterday, covering 11 new stocks. So Indian Hotel, Lemon Tree, Metro, some of those ideas apart from Godrej and Sobha from the discretionary basket, and from the financial basket, I would put my finger on Angel. These are all obviously ideas which are mentioned there in our report. Some of them are obviously part of our model portfolio as well. So we just reiterating them.
All right, Gautam, I'd also want to understand the rationale behind picking up Angel One at this point, because the stock has rallied significantly. What's the rationale and the fundamental behind picking that as your mid-cap preferred ideas, especially after the run-up that we've seen on this one?
So we've added Angel at about 1,800 2 months back when we released our preview report. Fortunately, the stock has done exceedingly well. It's up, I think, from there by about 50-55%. But most importantly, Nickey, the earnings have surprised fourth quarter in a row and have seen upgrade. the fundamental story remains extremely strong. You're seeing financialization of savings, more and more technology getting into the play. If you look at the monthly disclosures on market share, ADTO, volumes, new customer addition, I mean, there are a whole host of data points which come every month. Our confidence in that story remains very strong. While the stock has rallied, it is still available at 20-22 times and with a very high ROE and dividend payout. The risk is it's a high beta play, and it always is in a capital market sort of company. It would always discount the fact that at some point of time, if say markets were to correct and if sentiment worsens, there can be a big downside as well, because this is a stock which has already done very well in the last 3 years. We used to have it in our model portfolio from almost 1,000 rupees to 1,700 rupees. We've introduced it in October when we were doing our 2Q FY24 preview numbers.
Precisely why I asked this question, because it's a multi-bagger stock which is almost up 8 times in 25 months and still sitting in that list, perhaps giving us more apprehensions if there is more steam left to this rally. But coming back to your large cap ideas, essentially, it seems to be a mix of banking and auto names there in the large cap, and the mid cap seems to be divided between hotel and real estate. Now, help us understand, what do you see in the real estate sector where you've picked up so many ideas from?
So real estate has been in a down cycle for more than 10 years after 2010. It's only 2 years where we have seen data points improving, companies doing well, execution and pre-sales improving. In fact, after a blockbuster FY23, we had imagined that there will be some calibration in growth. And at the beginning of FY24, we were penciling in 14% pre-sales growth for our coverage universe. As we sit here in December, that 14% growth number has already been revised upward to 31%. We put out a note last week on real estate, which is a sector note on the number changes that we've done and our view on pre-sales, new launches, right? So first I've seen around 26,000 crores of new launches. We're expecting second half to see 80,000 crore plus of new launches for our coverage universe. The most important fact to remember here is the balance sheets have also improved, because real estate is a balance sheet and a cash flow business, right? Second, you've also seen affordability of the end buyer has gone up in the last 7-8 years, because the income growth has been reasonably okay, whereas the property prices for a large part of the last decade in the metros have struggled, right? So we see more steam still. We are just in the second year of an upturn. So we are, continuing to maintain our bullish stance on real estate, and we've highlighted a couple of ideas there in our report.
All right. On parting note, Gautam, last question that I have for you in that case is the markets have opened at record high. Within this month, do you see chances of further rally, or you think there is amount of caution which is expected to set in? Because FII thus far have been the missing piece of the jigsaw puzzle, right? I mean, just for the month of November, sure, there have been buyers for a couple of sessions, but overall, if you look at the historical trend also, it's the market which is driven by domestic institutional investors or domestic investors. With that in perspective, some amount of caution you think is warranted, and also talk about bank in general.
So, Nickey, see, caution is always required. It will be very generic to say that you should be cautious, because you should be cautious at all points of time in the market. Secondly, giving upsides or downsides in the near term for a month will be very difficult for a fundamental analyst like me. So I'll, stay away from that. As far as banks are concerned, you have to admire the fact that they've seen one of the best last 5 years in terms of their operational performance. As I keep repeating, the profit pool of financials in Nifty has gone up 5 times in 5 years, from 45,000 crores in 2018 to 2,23,000 or 20,000 crores in 2023. And we're talking about that profit pool jumping to 3 lakh crores in FY25. But the market cap hasn't kept pace with that. If you look at the market cap of the same 11 companies in Nifty, back in FY18, the combined market cap was 21 lakh crores. As we speak, it has not even crossed 40 lakh crores. So what has happened actually is some of the big banks have seen de-rating, which essentially means that the risk reward for large cap banks has become extremely attractive in our view, whether it is private, whether it's a PSU. We like both. but relatively our preference is more towards PSU Bank for last more than a year. We have a huge overweight sitting in our model portfolio on PSU banks. And of course, we have the usual names in private banks in our portfolio, ICICI, HDFC, Axis, and of course, AU Finance too. So we are very positive there. Overall, it's one of our preferred sector given the valuation and attractive risk reward that exists in the financial space.
Well, you've given in the private bank names that you like, but you prefer PSU more over private banks. Could you also give few names for PSU banks, so to say?
So in our model portfolio, we have SBI with a big overweight and also Bank of Baroda. So those are the two names where we are constructive right now. See, reason is very simple. While their ROEs have improved substantially in the last 2 years, the valuations are still trending at sub one-time price to book ex of SBI. So if this ROEs were to sustain, we think that the valuations have a room to expand from where we are right now. And credit growth continuing at 13-14% at the system level, we provide them ammunition to maintain at least a low double-digit kind of a PPOP growth, even if margins were not to expand from here on.
All right, Gautam, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us. All right, with this, it's a wrap and goodbye from the entire team who puts this together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.